All right, guys, welcome back to the channel. So today the market is bloody red. Everybody's losing it as I go through like Facebook and all the groups, and also as I get on YouTube. Everybody's freaking. This is like the third or fourth down day this week, and the market is just letting some air out, guys. The earnings season, all the stuff going on in the world. Today is Thursday, February 5th. So whenever you guys are watching this, I think you'll be able to trace this back to a very red week in the market. Now, we don't freak out. For those of you who don't know, we are income investors. We basically get distributions and dividends from assets, and we also use some margin against our portfolio to sell options for a second income. Now, even in the option groups, people are losing their mind right now. I mean, there's a lot of people upside down real bad on overinflated stocks. I will say right off the bat that a lot of the stuff in our portfolios, even though we sell out pretty good, has been underwater. But there's a simple solution when you're in decent names, and that's to roll. You roll your options, or you can buy to close and then resell, whichever way you like. Now, I'm going to talk about just two trades, and then I'm going to talk about other things we do during these volatile market cycles, especially these heavy drawdowns, to make some extra money. But the first trade I want to talk about is we had quite a few shares of Soxel that we had puts on. Now, in this example, I have a $56 Soxel put, and it was out until tomorrow. Now, obviously, I would be assigned because Soxel's been bouncing back and forth between about $50 and $54. So more than likely that would get assigned. So all I did was take it from 2.6 when it was supposed to expire at 56, and I rolled it to 2.27. All right? Very simple. Just move the date out some. And for that, I ended up getting $710. But you don't get all that $710. You have to take out the buy to close. So to buy to close is $4.10, which makes the net profit on this a $300 profit. Now, it's important to understand that when you do the math on this, that comes out to almost 6%. It's like 5.5% on my money for what is essentially 3 weeks. All right, that's pretty good. So I'm not here stressed about my trades. My trades are already out now at a lower strike price, out 3 weeks in the future, and I made 5+% on it. There's zero complaints from me right now on that. So another trade I want to talk about is a TQQQ. Now, I had multiple TQQQs. All right, different strikes. This is my lowest, but all of them pretty much came out the same, right around just under 1% a week. Now, the higher the strike, the farther I threw it out. So in this example, I had a $52 put that I rolled, and I didn't change the strike price. I left it at 52, but it rolled from 6 to 27. So instead of expiring tomorrow, it expires in 3 weeks. Now, to do this, I had to buy it to close, which is $3.90. And then sell to open was $5.40. So all you do is subtract that. And what I ended up getting was about $150. Now that's not quite 1% a week, but it's close enough. And honestly, I don't have to worry about the trade for 3 weeks now. Now, time is your friend. Anytime you have a situation where the market is falling, giving yourself more time can easily fix a situation if you're in an asset that recovers. Now, before we go on to other ways we make money in a down market. I do want to mention that anyone who tells you they don't have losing trades at some point in time in this game is lying to you. I currently have one losing play right now, and that's SoFi. SoFi is over bloated right now, but they are an actual business model. They are profitable, all right? So in the long term, I think they will recover. Right now, the premium is just not worthwhile to roll it out. So I will take assignment and I will wait to see how fast it rebounds, if I need to buy down or what needs to happen. But I feel really good in SoFi rather than a lot of these other plays that people are just getting smashed in. Now, even good companies are taking serious haircuts. Now, those haircuts might be because they were overvalued, or some may be that they're really not worth it. And I'll give you an example of one that I think is a middle ground, and that is Hood. All right, Hood. That's Robinhood. And I think that Robinhood is getting into so many different things that they are going to be a juggernaut, but they've been overblown and built up a lot. I mean, you probably have seen a run up of well over 85% in the last year. So for them to have a pullback of 20, 30, 40%, that's not unreasonable. I don't think the company is bad. I think anybody gets stuck with it that doesn't sell at a loss is not going to be in trouble long term. You just got to be willing to take the time to move forward. Now, we're about to talk about something we don't do a lot. It has to be special conditions. I don't really condone it or suggest it to anyone. And none of this is financial advice. This is literally just me talking about what we're doing. Do not copy us. It will not work out well for you. But pullbacks like this can be very profitable going forward in the future from this spot, because generally the market just likes to tick up slowly, or it has a run and you can make a bunch of money. But another way we make a lot of money is what I like to call a small swing trade. Now, what I mean by that is, like, my wife went this morning and she bought some shares of Soxal at $51.31. Now, those 10 shares she bought, that's not much, but that's the point, because she turned around 12 minutes later and a limit order that she had set triggered for $55. So generally speaking, she made about $35, $37 in 12 minutes. Now, you have to be careful with this because they will call you a day trader in brokerage accounts if you do this too often. We like to put 10 shares in one account, 10 shares in another account. Like a Roth, do 10 shares in there. Traditional, do 10 shares in there. HSA, do 10 shares in there. That way, no one account is taking a heavy burden in case the trade doesn't work. But you have to have the right setup. You have to see that it's swinging back and forth between these two numbers throughout the morning or throughout a period of time, and then get in. Now, I actually, at the time of filming this, while I was setting up the camera, had another one of these go through where I bought in at $50.18 on Soxal and ended up having only 9 shares in my Roth that filled at $54. So definitely chances to be profitable. It has to be pretty extreme. The volatility has to make the price bounce all around in order to really make this work. And you definitely don't want to go too heavy. We have no problem holding Soxal at the prices we originally paid for these. So whether it worked out in that day or a week from now, we still would have been happy, and it's a very profitable way that we use to make some extra money only under these certain circumstances. Now, I think that if your strategy has you so worried that you spend all day worried about it looking at your phone, because our day hasn't changed. My wife's out running. I'm sitting here making videos. I'm looking at my phone because I'm looking for opportunities to make money. I'm not trying to solve anything. Basically, it took me about 15 minutes to go through every one of my accounts, roll my stuff out, and I don't worry about it. I probably could have waited till tomorrow to do some rolling and maybe even made a few more dollars. But I know what I want to make a week, and I kind of stick to that. There's no reason for me to be overly greedy because that's when I make mistakes. Now, as I said, I'm not perfect. I'm in a SoFi trade. My price is not great, but it's definitely not terrible. And with a actual winning business model, I think SoFi will be fine and recover. Over the longer term, I'll just have to hold it till then. But if 90% of that account and well over 100% of the rest of my account is rolled, making money, and everything's looking good, you really can't complain. Our strategy is not the best. It is not the most profitable. But it works for us and it produces. It's just a paycheck structure. That's all it is. It's nothing special. There's people out there that will easily outperform us long term with probably index funds or growth stocks. But we're not worried about that because here in semi-retirement, we just want to get paid every week or every month or whatever. And on top of all this, our dividends are still rolling in every single week. I honestly think that we finally have this ironed down that it's almost a no-brainer, which makes it a little less fun because if you don't know what's going to happen, it can be exciting. But that's where your mindset shifts from producing income to speculating. And that's exactly what I don't want. I want to know where my money's coming from. I want to produce it. I want it to be safe, and I want to make sure I have it there to spend. But with that said, if you haven't already, and I don't know why you wouldn't have, go down, hit subscribe, hit the notification bell so you see all of our upcoming videos. Let us know down in the comments how your setups, trades, how you're making money in this red, bloody market. Are you down? And how are you feeling about it right now? Does that bother you? Or do you feel that your strategy has it all under control like we kind of feel about ours? And I will see you in the next one.